Hi, everyone. Welcome to Waste360's Nothing Wasted podcast. On every episode, we invite the most interesting people in waste, recycling, and organics to sit down with us and chat candidly about their thoughts, their work, this unique industry, and so much more. So thanks for listening and enjoy this episode. Hi, everyone. I really hope you enjoyed this episode as much as I did. It's the mergers and acquisitions session that we had at the Business Leadership Forum. It's a co-located event with Waste Expo, and this year we had it at Waste Expo together online, and it really is fantastic. You're going to get sage advice from seasoned leaders who have been there, who have either sold or bought themselves. So I think you'll get a lot out of it. Enjoy and let us know what you think.
Hello, and welcome to the Business Leadership Forum's Mergers and Acquisitions discussion. My name is Ian Mearns, and I'm a Senior Vice President and Group Manager with Comerica Bank's Environmental Services Department. I've been with Comerica for more than 22 years now and have been exclusively helping companies grow in the waste and recycling industry for over 14 of those years. It is an absolute privilege to be the moderator for this year's conversation about mergers and acquisitions. Over the next 50 minutes or so, you'll get to hear firsthand accounts from some of the industry's finest and most accomplished individuals. If you listen to the earlier part of the business leadership program about financing growth, this is the group that has put that into practice. Joining me today to provide some insight into their experience is our panel of four. These gentlemen have been acquiring, attaining the financing, and completing due diligence for years all across this country. And so I'm going to start by introducing Charlie Appleby. Charlie?
Hello, everyone, and exciting to be here today, and I appreciate everybody's time. As Ian indicated, I'm Charlie Appleby. I am chairman of a company called Integrated Waste Solutions Group. We started IWSG for the short term of that in 2017 to develop integrated solid waste operations throughout the United States. We're headquartered in Austin, Texas. We have our first operations in Austin, Texas. In addition to that, I was a founder and CEO and chairman of Advanced Disposal Services, who many of you have probably heard of. We grew that from literally a scratch start operation to the fourth largest solid waste disposal company in the United States. In the 14 years I was with Advanced Disposal, we completed over 125 acquisition development projects, and we're very busy in that arena and look forward to sharing some of our thoughts on that. Thank you.
Great. Thank you, Charlie, and welcome. Next, we have Scott Foster.
Thanks, Ian. As Ian said, I'm Scott Foster. I'm a partner with KPMG. My role is leading diligence on waste transactions, acting for buyer or seller, large transactions or smaller ones, working with folks like Joe and Charlie and Robert in conducting financial diligence and commercial diligence in understanding the various risks and opportunities associated with the transaction. Thanks, Ian.
Great. Thank you, Scott. Okay, next we have Rob Maholick from Kinderhook Industries.
Hi, thanks, Ian. Rob Maholick here. So I started investing in the waste industry about 22 years ago into ISI Corp when I was at Thera Capital. I think I met Charlie back in 2000 when he was just starting Advanced, and probably Joe not too long after that. Raised and started my own private equity firm, Kinderhook Industries, with a focus on environmental services. Over the span of our 17 years, we've invested approximately $1 billion of capital into 10 platforms in the waste industry broadly, spanning everything from municipal waste to industrial waste, wastewater, and hazardous. We currently have 7 platforms in our portfolio, and we've executed almost 50 add-on acquisitions into that portfolio over the last 15 years. So very pleased to be here, and obviously we have worked tremendously well with Comerica over that entire period, and they are the leaders in this industry for a reason. So thank you, guys.
Thank you, Robin. Thanks for those kind words. You've been a little busy here over the last few years, to say the least. And then next we have Joe Winters.
Yes, hi everyone. So I'm Joe Winters, the chairman and CEO of Winters Brothers Waste Systems. Appreciate the opportunity to be here today. Winters Brothers has been on Long Island since 1950. The company was started by my dad and my Uncle Joe. I'm a second generation garbage man. We operate 9 transfer stations, 3 hauling divisions, and we have over 400 employees. Our company is a mix of residential, commercial, roll-off, and recycling services. Over the past 25 years, I've done over 100 acquisitions, and I've sold companies on 3 different occasions. I'm happy to be able to share my experience with everyone today.
Great to see you, Joe, and welcome.
Thank you.
And to all 4 of you, welcome. It's a pleasure to be here today, and I'm looking forward to our time together. And so now that we've all been introduced, I just want to dive right into that discussion. So with that, Charlie, I want to start with you. Obviously, we just heard a little bit about your experience, and that really is across many different markets across these United States. Talk about what you're looking for when you enter a new market.
Very good question. And our overarching strategy of both at Advanced Disposal and also with IWSP is to control the waste stream from inception to disposal or beneficial reuse. And that's sort of our strategy, and how we accomplish that is we seek to develop or acquire integrated geographic hubs in the marketplace in which we operate. Now, integrated geographic hub, if you think of a wagon wheel with the hub of that wheel being a disposal facility, whether a landfill or a recycling facility, and around that hub, we seek to grow hauling operations to feed volume into that disposal facility so we can control it from where we pick it up all the way to disposal or beneficial reuse. So with that in mind, we then seek to understand the competitive dynamics of a particular marketplace in which we have an interest. Again, we want to be able to achieve that integrated geographic hub. So what is the growth profile of the marketplace? Is it high growth, normal growth, slow growth, negative growth in some instances, a declining market? What is the pricing like in the marketplace? Is a growth in pricing, is that possible, or is there extreme competition keeping that pricing depressed? Is the market controlled by the large public companies? And you might think the answer to that is, well, if the answer is yes, what does that mean? Well, sometimes that means it's a good place to go, but I'll leave that one alone for now. Are there a number of private companies that might be available for acquisition? If we're going to develop this integrated geographic hub, I mean, you can do scratch starts, but acquisition is usually a quicker and more effective way to accomplish that integrated operation. Is there excess landfill capacity driving depressed market pricing? That's an important consideration if you want to be integrated in the marketplace. How many competitive landfills are in the marketplace and who controls them? That's always important. What is the remaining life of those landfills, and how likely would they be able to expand the airspace capacity of that landfill? And are there other private landfills in the area that are available for sale? And based on all that, if you can achieve vertical integration, and the answer is yes, then you look very carefully at the opportunities.
Great.
That's good.
Thank you, Charlie. No, very insightful. Rob, we're going to move on to you. Given the current environment and the upcoming national election, are companies more or less eager to discuss potentially selling their business?
I've been surprised over the course of the last 12 months that more people aren't anxious about selling. That doesn't mean there's not opportunities, but I don't see independents, running for the hills. It's been a good environment. Obviously, the COVID pandemic has created disruption. But having said that, I feel the garbage industry has been in a very good spot for the better part of the last decade. The majors, Waste Republic and Connections, have provided tremendous leadership in terms of pricing. That has been great for everybody who's in the market, who's been able to follow that lead. The recycling downturn caused dislocation, but I think it long-term helped the industry by resetting the market in terms of the value of recycling. And if you want recycling, it has to be paid for. It's not a free service. It has to be paid for. But I think participants in the industry have repriced, and now they're seeing margin commensurate with their traditional waste collection businesses on the recycling side, or they're just walking away from the business. And so all of that, I think, has led to a solid environment for independents to grow. Financing costs are low, right? 10-year yields are, treasury yields are, I think, up to 0.7 of a base percent here now, up from 50 basis points. That means you can buy equipment cheaply. And that means that you can build a business and purchase real estate. And I think a lot of these reasons, it has allowed independents to actually do well. The other part I would say, to the extent that the political situation would lead you to sell because of the fear of tax hikes or otherwise, it's probably almost too late to get into the game and sell your business before year end. So anybody who's recently scared, they better hurry up. And my number, I think, is on the website.
Great. We'll get that out there for you, Rob. So, Joe, you obviously have a very large presence on Long Island. Talk about how you go about looking for acquisitions and what are you looking for?
So for us here on Long Island, it's much more localized type of business. There aren't any real landfills for MSW. There are some incinerators. But yet there's still some mom and pop companies, smaller companies that could be acquired. There are no public companies, Waste Management, Waste Connection, none of the public companies are here in this marketplace. So when I'm looking for a company, I'm really looking at this point in our company, I'm looking for tuck-in acquisitions. I love tuck-in acquisitions, fit into our infrastructure, our footprint. I'm looking at the quality of the revenue, how much permanent business they have, the equipment they have in the company, how good is the equipment, and what can we do with it? What earnings can we create? How can it be accretive to us? And what can we pay and have that still be accretive to us? And proper valuations, right? So that's kind of what we look at. And there's other ways to grow. We're growing our earnings by just improving our own company. We're working on routes, weighing our routes on a daily basis, productivity, all kinds of things like that. So there's a lot of ways you can grow a company. And so we love acquisitions, but we also love continuously trying to improve our company.
Great. Thank you, Joe.
Yeah.
So as part of that, when you're looking for opportunities, Scott, you see a broad spectrum. You're conducting due diligence and looking at some of the financials and the accounting sides of the businesses. What are some of the key reasons that you're hearing out there that owners might be looking to sell, or conversely, to Rob's point, maybe aren't necessarily looking to sell? What are you hearing out there?
Yeah, I think to echo Rob's point, there's still a really strong macroeconomic environment. Public company valuations are still relatively strong. The lending market is great. There's a tremendous amount of capital available to buy businesses from sponsored businesses like Charlie's and groups like Rob's, and so there's that. In that sense, the market is great to sell. The same dynamics that existed 6 months ago around aging demographics of many of the founders of some of these businesses as well, and so that's driving some of the activity. So, we look back. Yes, it's been a disruptive 6 months, but a lot of the same foundational macroeconomic dynamics are there. And so that's part of why we're still seeing a good amount of activity for those looking to sell. I think a couple of other factors that may have impacted this is, for many people, COVID introduced some tough decisions, furloughing employees, cutting costs, something some folks may have never had to do, and it's caused some folks to revisit whether they want to continue to do this. So we are seeing some folks, using that as an impetus to sell. There's also a bit of a shortage of activity over the last 6 months, and so some people are trying to time the market and take advantage of that. Robert also mentioned the taxes, and I think he's exactly right. We've seen a large amount of activity over the last couple of months of people preparing to try to get a deal done before December 31. So it could be a busy Q4 from a deal-making perspective. The last thing I would mention is, it's sort of open road. There was a bit of uncertainty in the market with the ADS transaction, lingering for over a year, WCA, a large transaction, with those both not necessarily completed, but the uncertainty associated with both of them sort of opens up an opportunity for folks to come to market from a deal perspective.
Great, thank you, Scott. So Rob, we're going to come back to you. Kinderhook has obviously done several different types of transactions outside of the environmental sector, but also inside, and you alluded to some of those earlier. How do you find these opportunities and put them all together? And maybe the second part of that, and you can wrap these all together, are what are some of the strategies you employ when you're trying to approach a potential seller who may not have an interest in selling?
So, we focus 3 broad industry sectors at Kinderhook: healthcare services, automotive components, parts and services, and environmental services. So those are the 3 sectors that we invest in. We've been focused on those 3 sectors for over 15 years. The benefit of having that industry focus is that you develop deep relationships with the participants, with the executives, with entrepreneurs, with lenders and advisors. And as a result, people reach out to us. We tend to hear things like other industry participants, as opposed to hearing things like other investment firms. And as industry participants, there's a known quantity. People recognize who Kinderhook is, and then we have a reputation, and our reputation is one of being a good partner with management. And so when we find an opportunity with the company that we like, we are essentially selling ourselves to those executives, and we want to be the partner of choice. And we always tell them, look, the best way to get to know an investment partner is to talk to other people they've worked with. Make those phone calls, do your homework, see what those people are like. When everything's going great, every investment partner is a great partner because you're making money. It's when things get tough, when you don't hit the plan, when you lose a permit, when you lose a large contract, and all of a sudden you're in the rough water, and how does your investment partner respond to that? And that's where you earn your medal, and that's where you either solve things as a good partner, or you expose yourself for being a jackass. And we like to say that we're the partner of choice in the industry, and we believe that's resonated with folks over time, and certainly we think that's going to help us going forward.
Great. Thank you, Rob. I agree. The relationships are key. So, Charlie, we're going to come back to you. And in your opening remarks, you alluded to some of the characteristics in the marketplace you look for, including vertical integration. Can you talk more specifically about when you're looking at an acquisition opportunity or a platform company that you're looking to acquire in a new market? Dive into the company a little more specifically. What attracts you to them specifically? Recognizing the market dynamics, but also what do you like about the company itself?
Obviously, a very good question. When an opportunity becomes available, what do you do with that? It may come as a surprise to a lot of people, but we don't acquire companies based upon an EBITDA multiple. Most people think we do. That's sort of an after-the-fact calculation that makes everybody think that's how we did it. We value companies based on a total analysis of a particular business. In essence, it's really a discounted cash flow analysis of what we expect that business to be able to do well into the future. Now, if we're entering a new marketplace, a fully integrated opportunity would unquestionably demand the highest valuation, particularly in a new market. That makes it lots easier to achieve this integrated geographic hub that I spoke of before. Now, you don't always have that opportunity. So if it's not integrated, then what do? You look at various aspects of that. A business that is predominantly commercial front load is more valuable than a temporary roll-off business. That's because of the recurring cash flow of the front load commercial business. How much of the business is under long-term contract? If very little of that business is under long-term contract, that really pushes the valuation down. What is the average age of the fleet? If a business has a fleet age of 4 to 5 years, it's going to be worth more than a business with an average fleet age of, let's say, 8 years, because if it's 8-year fleet, or even worse, shortly after closing, an acquirer such as us will have to spend money to bring that fleet into compliance. That's going to reduce the purchase price. A business that's in a location with only one disposal option with a competitor is much less valuable than a business that operates in what we would call a disposal neutral marketplace, where there are numerous disposal options, all of which could be competitors, but as long as they're all reasonably available, that's much better than having to basically be at the mercy of one competitor controlling the disposal option in the marketplace. If it's controlled by a municipality, such as in Jacksonville, Florida, is a good example of that. And that's a neutral marketplace if everybody is on the same playing field in terms of disposal. Of course, even better, if we can internalize the volume from an acquisition opportunity, that's even better. And that's the reason we like to do these integrated geographic hubs.
Great. Thank you, Charlie. So, Joe, you've acquired a company. Talk to me about some of the keys to a successful integration in your mind, both operationally, but also maybe from a different perspective. Talk about the teams and your management and the new personnel coming on board. Talk about some of the operations, but then talk about how important it is to you to get the people all on the same page.
Right. So to us, there's two main things: organization and communication. Right. So I'll give you an example. We acquired Allied Waste assets here on Long Island back in August of 2006. We acquired Waste Management's assets in December of 2006. So therefore, we tripled the size of our company, multiple unions, multiple billing systems, multiple different cultures, 3 different cultures. So how do you put all of it together? The only way you really do it is communication. Really sit down and talk with the key personnel people, understand their perspective, understand how they're going to feel about it, right? What does this mean to me? What does this mean to my family, right? And really have that great communication with everybody and be very organized, right? Very organized on a weekly basis, have a detailed list for everybody, assignments, and just keep everybody moving in the right direction. But it's really, I'd say the main thing is communicating with all sides, both sides, and see what's important to them, how they get their perspective, how they look at things. And we've done it many times, as we said, and I think that's the one I'm most proud of, by putting those 3 companies together in such a short period of time. So I think that's really the most important thing, I would say, is the communication and the organization and having the right people in the right positions.
Absolutely.
Yeah.
Great. So, Rob, as a financial partner, what are some of the most important points that you look at when you're evaluating an acquisition opportunity alongside the management team?
Yeah, I mean, obviously, management's number one. I think Charlie did a pretty good job, going through the various levels of value, and at the end of the day, one of the things that Mickey Flood taught me very early when I was 26 years old, just looking at his company for the first time, and he asked me what was the most valuable asset in the waste industry, and I said, well, geez, the landfill, isn't it the landfill? And he said, well, no. And I said, well, the trucks, no. And at the end of the day, it's the customer, and how do you control the waste at the curb, and that's by providing good service at a fair price, and so we look at the companies that we're going into and say, hey, are they a good service provider? And if you're providing good service, that you can really leverage that asset to grow. Of course, you have to have a good fleet. Of course, you have to have a disposal neutral market or have some control of your back end disposal. But ultimately, the value in this business as a service business is having that culture that allows you and has everybody every day focus on best service to the customer. And so that's, it's a soft point, but it's ultimately the most important point. Am I getting out there and doing a great job for my customer? And of course, if I'm doing a great job, I can charge a fair price, and I'll grow as a result of the word of mouth benefit of doing your job right.
That's great. I think we'd all agree, and I think that's very sound advice from Mickey. Thank you. So Scott, going on to COVID-19, you had mentioned it earlier. Maybe you can expand a little bit on the impact from COVID-19 on the M&A market. How is it adjusting? How are people evaluating the businesses in this environment? And how are people assessing the short and long-term impact of COVID-19?
Sure. And I think it was mentioned before that many waste companies have been very resilient through this in managing their costs, finding ways to continue to operate the business and serve their customers. But I think for many buyers, they've been somewhat tentative. It's maybe changed in the last month or two, but over the first few months of sort of the COVID period, people were waiting for more information. I want to see what this actually means for March, April, May. Now that there's 5 or 6 months of results, people I think are a bit more comfortable and understand that there's different levers that businesses can pull to manage their costs, and particularly labor costs of reducing overtime, being flexible with how you deploy your drivers, maybe put more people on residential than commercial because those businesses have maybe shifted as far as volume goes. So I think buyers are understanding that better, and they're getting more aggressive now in pursuing that. But we did have a period where deals were taking a long time to get concluded. Part of that was lenders being a little bit reluctant, but I think also buyers being quite tentative. And many sellers were also overwhelmed with what they had to do in the short term, in March, April, May. Now there's, I think, a bit level of comfort and some sort of normalcy to the business, and therefore we're seeing deals returning right now. As far as what we're doing from a deal perspective, it is different, right? A lot of what we do is trying to understand what is normal. What's a normal amount of revenue? What's a normal amount of cash flow? It's really hard to tell someone what's normal right now. Do I look at the past? Do I look to the future? And so it's a challenging time for us to do our job. I don't think we'll get a lot of sympathy, but it still is challenging. And so we do have a lot of conversations with our clients to understand what's important to them. Some of the things that Charlie mentioned, really digging in on those. So we probably spend more time now looking at forecasts, revised budgets, as opposed to looking at historical information. We're really digging in on revenue and understanding what's happened to revenue, right? How's it trended month over month? How are bad debts a problem? Have they not been identified yet? Is it coming down the pipe? So I think our focus has changed a little bit. Really trying to understand, is something a short-term impact or is it a permanent impact? For example, fuel. Right, fuel costs have gone down to the benefit for many collectors of waste or transporters of materials, and have they locked that in the form of a hedge? Is it something that you can count on in the future? So it's a little bit different on that. And I think buyers and sellers in some cases have looked for different strategies from a deal perspective to get them done. And that may be sharing risk in the form of some sort of deferred payment, whether it's an earn-out or vendor take-back, to allow for valuations to still be relatively robust, but risk share if there is a change in the business fundamentals.
Great. Thank you, Scott. That was a very comprehensive answer, and I appreciate all that information. I do want to ask Charlie and Joe, just as operators, and Charlie, obviously, you closed the deal kind of right in the middle of all of this. But Charlie, what are you seeing out there? Is there anything you could add to Scott's comments about COVID-19 and its impact that you're seeing out there?
Well, it's certainly been an interesting year. I think we can all agree with that. Pandemics, hurricanes, riots, when's it going to stop? Is a question that gets asked a lot, it seems like. But the solid waste industry has proven once again why it's such a great business. A recession-resistant business with recurring cash flows that can do very well, even in this environment, based on one overriding factor. And Rob mentioned this earlier, and so did Joe. That overriding factor is people. It's always about people. And I don't mean just management, which is obviously very important. Rob mentioned that earlier. I mean your people from bottom to top, your drivers, your mechanics, your equipment operators, your route supervisors, your customer service representatives, your salespeople, and of course, yes, management. All of that's important. We wouldn't have a job if it weren't for our people doing what they do day in and day out. We exist for them, not the other way around. And we need never to forget that. I think a lot of people forget that sometimes. Now, operations have actually done pretty well during the pandemic. Many companies hit the pause button on acquisitions as COVID-19 swept the country. As you mentioned, we acquired Central Texas Refuse effective April 1st of this year, basically in the middle of the first wave of COVID infections. I can tell you, in late March, we took a deep breath. We carefully evaluated the risk and decided to move forward. That has proven, in my opinion, to be the right decision. We are moving forward. we're taking all the reasonable steps to minimize the impact of the pandemic, and it's working. Rob has mentioned that there's a lot of things you can do, and Scott mentioned that also. We're moving aggressively to execute our integration strategy, including our focus on safety and technology, with a recent decision to install third eye systems in all of our collection vehicles. We think you can't stop because things are happening. You got to keep doing what's right for your business and your marketplace. And our CEO, Mike Levinko, and the entire management team is integrally involved in all of our businesses. Our people are working hard, and we're very optimistic about the future.
Great. Thank you, Charlie. Joe, I had mentioned I wanted to ask you about it. Were there any issues specific to Long Island? Obviously, you were just outside of the epicenter at one point out of New York City. Tell us your thoughts on COVID-19, maybe right when it was bubbling up in the hot spots, or even where it's at now today.
Yeah, very scary times, right? As you said, we're right outside New York City, and we were hit the hardest. And, and actually a lot of people from New York City have come out to Long Island. So, it's been tough times. The main thing I will say is like Charlie said, I am so proud of our team, everybody, our drivers, our customer service people, our laborers, our mechanics, everybody on our team. We've never missed one route. Every route was picked up every day. And every one of our facilities were open every day they were supposed to. So I'm very proud of our whole team. And then I'm really proud of the management team who said, hey, what expenses can we cut? How can we overcome this? What can we do? And it actually ended up being a good exercise for us to really take a real hard look at how you run your company and how you do things. And I think we're better for it. We're ready. If a second wave comes, we're prepared. We have contingency plans in place, and we really feel like we're ready for anything. So again, we're really, really proud of everyone on our team, and they've all done an outstanding job through this crisis.
Great. Thank you, Joe.
Yeah.
So, Rob, we're going to talk a little bit about financing it. Your portfolio company has a deal under LOI. Now, how do you pay for it? As you're out there figuring out how to pay for it, how important are relationships to you when you're looking for a financial partner? And then the second part of that question will be, how important is it to you that they actually understand your business?
I already said Comerica has been our partner and a great partner in this industry. I go back to 2008, and we were working on acquiring the Environmental Quality Company. Environmental Quality Company is a hazardous waste business located just outside of Detroit and Wayne, Michigan. Hazardous landfills, hazardous Part B facilities across the upper Midwest. And of course, we had a transaction agreed to before the financial crisis hit in September of 2008, and Lehman went bankrupt. And everybody took a deep breath, but there was a lot of glassed over eyes in the finance world in October and November, and we had a commitment to the seller that we were going to pay them $200 million for their business, and we were able to keep that commitment. We were able to close. And Comerica Bank, who we've worked with, and they knew the industry. They knew the value of these assets that the Environmental Quality Company had. They knew the quality of the team, and of course, they knew that they had a financial partner in Kinderhook that understood the industry, and we were able to get that transaction closed. I think it closed on the Friday between Thanksgiving and Saturday there. It was an amazing thing to have a bank step up in that environment when most banks were worried if they were going to be in business next week. The COVID crisis, not dissimilar. We've closed on a couple of platforms since March 12th or 15th when everybody went home. One of them, a waste company, as I mentioned earlier, in Mobile, Echo South. We've worked on the asset. We identified the business prior to COVID. We had agreed with the seller to a price. We were able to get that transaction closed again with Comerica Bank. They understood the asset. They understood the industry. And again, they understood that we were a financial partner that was going to stand behind their companies, even if things maybe went a little bumpy for a while. So relationships, partnerships, industry expertise, all of those things come together to close a transaction, and they become mission critical in a challenging environment. And people make tough decisions in a challenging environment to get something done for people that they know and trust. If they don't know and trust them, then they're going to step back and say, well, you know what, guys, we have to pause. We'll do this some other time. And so it's I can't really emphasize it enough. The quality of the relationships and the quality of the assets really need to both be there, but it's the people that count.
Absolutely, Rob. It's always about the people. Thank you very much. Joe, I actually want to ask you the same question. And you've had quite a few different financial partners along the way. Talk to us about your relationships.
So for us, we've been doing business with Comerica for close to 20 years. We've been doing business with Clairvest Partners, our equity investor, for over 15 years. I've been using the same law firm, Scorsese Hollenbach, for 20 years. So it's really about the relationship and the trust between the parties and the credibility. I learned many years ago, you really only find out if you have a good partner when things go wrong, right? Because everybody loves you when things are going right? But you really find out who your friends are when things go wrong. So, and that's really the key to me, is who's going to be there for you when you hit that, the bump in the road, that speed bump, or you have a problem, or things don't go as quickly as you had hoped, or it costs a little more than you thought. And really, to me, that's all about the relationship and the trust and the credibility. Joe Ursi, close to 20 years, Ken Hollenbach, 20 years, and it's we've all been working together for a long time, and it's really about trust in the relationships and the credibility with each other.
Great, thank you, Joe. And one thing you touched on there, I had asked about the financial partners, but I also think it's very important to point out, like you rightfully did there, about the non-financial partners that you have, your accounting people, your legal team, and all those things. If you can trust those people and develop relationships there and know that they're with you in the bad times, as you said, I think they're all very important. So thanks for adding that on as well. Yep. And so, Charlie, we talked a little bit about the different types of financial partners here, and you've obviously had a few over the years. Talk about the different types of financial partners, the private equity folks, the lenders, and how do you get comfortable with them? But then the second part of that question, as you talk through that, maybe at the very end, can you talk about some of the questions, maybe somebody here in the audience who hasn't gone through a private equity partners or dealt with a Rob Maholick or dealt with even a senior lender? What are some of the key questions they should be asking their capital partners?
All very, very good questions. And I'll give this answer based on my many years of experience in the industry with many, many different types of financing sources. And not all of that experience has been good. Your choice of banking and equity partners is crucial to the success of your company if you need those funds to grow and expand your business. You have to do your homework. Never back yourself in a corner. And let me give you an example of what not to do that we did, which was unfortunate. In the early years of advanced disposal, we needed to raise capital to fund our growth plans. We negotiated a non-binding term sheet with a private equity firm, which we thought would fit well with us. However, during the detailed negotiations of the binding documents, as those negotiations drug on and on and on, we were nearing a requirement to renew our bank facility. And we also had a binding obligation to purchase a company that we didn't really have the funds to do unless we're able to close on the equity injection. The equity fund understood that, and slowly but surely, in my opinion, consciously began tightening up and changing the terms, eventually terms that were totally unacceptable to us. Now, we were in technical default on a bank debt. They thought they had us backed into a corner and attempted to extract a heavy price, thinking we had no choice. They were showing us, thankfully, what could have happened after closing that happened before closing. Now, to borrow a term from a long ago book, and we actually used this term when we discussed what to do. The barbarians were at the gate, and we had a choice. We had to kill them or let them in. That was really our choice. So what did we do? 5 days before the scheduled closing and before we signed the binding documents, we walked away from that deal. They didn't think we would or could do that. But importantly, the bank supported us. We arranged very expensive short-term financing, but we've learned a very valuable lesson, which I've used on many occasions since that time. Do not jump into a pool of sharks if you're bleeding, because they will show you no mercy.
Yeah.
What saved us? It was our banking relationship. Our bank supported us when we needed it most. Now, just hitting a commercial plug, but Comerica Bank has been an important part of our success from our early years of advanced disposal and now at Integrated Waste Solutions Group. And I'd suggest to everyone to work hard to maintain that great relationship with whoever your banking relationship is, because when you need it, you got to have it. They need to be there. And we always found that to be a two-way street. But it's not always bad news. You know, from that learning experience, Advanced Disposal went out and in 2006 sold basically 100% of our business to another private equity firm. At that time, Advanced Disposal was doing $110 million in revenue and about $40 million at EBITDA. That private equity firm provided us the correct support, the critical support and expertise when we needed it. And when I retired in 2014, we were doing $1.4 billion in revenue and $400 million in EBITDA. And our private equity partner and our banks were a critical part of that. And oh, by the way, my primary contact at that private equity firm that was such an integral part of this ADS success story has now formed his own private equity firm, Nova Infrastructure, and Nova Infrastructure has a new investment in the solid waste industry, Integrated Waste Solutions Group. So it can work. So what should you consider? What should you do in considering private equity? Rob mentioned this earlier. Talk to the people who have done business with them. Understand how they run their business. Will they really take time to understand your business? What are their long-term objectives for the investment? How will they support your growth plans? You need to understand they will exit the investment at some point in time. That's what they do. Don't think they won't. They will, and they should. How and under what terms they will do that is important. Make sure, and this, in my opinion, is critical, make sure that your interests are financially aligned with your private equity investor. If you're successful, they're successful. If you fail, they fail. That is the key. You don't want to have a misalignment of your interests. You have to fully understand the incredibly complicated nuances of the investment documents. You have to have good advisors. And are they really invested in a management team that they will actually allow you to run your business? Or do they think they know it all and management is just a means to execute their directives? Those are all important things to ask. And importantly, do they appropriately incentivize management with equity participation? In my opinion, if they don't, you should walk away. And good luck.
Thank you, Charlie. Great answer. We appreciate that. So I want to talk about due diligence. So you're looking at a new opportunity. Scott, can you help the audience out there and give them some advice on how they, maybe as a seller or even as a buyer, should be preparing their company for sale? And what are the most common pitfalls that you see when you're conducting diligence for either a buyer or a seller?
Yeah, I think the most common one from a seller's perspective is really underestimating the amount of information that is going to be needed in the diligence process, whether it's financial information, legal, environmental, people-related information. It's quite overwhelming for many folks. So it's self-serving, but Joe and Charlie have both mentioned it. Get good advisors, hire a good lawyer, hire a good accountant to help you with that process. I think and an investment banker likely to help you with that sale transaction. It's going to take some time. It is quite disruptive to a seller to be able to run the ongoing business plus do all the things you need to do in a transaction. So important that you plan and give yourself enough time to get ready for that. As an example, when my group would get involved, it would be a 4 to 6 week or more time frame that you're going to have, us very aggressively communicating with you, looking for information, asking questions. At the same time, you may have lawyers and other advisors. So it is an incredible amount of time and takes a tremendous amount of work. I think Charlie referenced, cash flow, and that is really where we spend our time and where we try to understand that. And so I think it's important that it's not just your financial statements or your, the basics. We're going to get into fleet age. We're going to get into if it's a landfill, all of the aspects of closure and post closure and capping costs and things like that. And so everything that you spend money on, where your cash is going, people are going to ask questions about it. So it is going to be a really detailed process. So I think if you hire good advisors to help you through that process, it'll be a much less painful exercise. From a buyer's perspective as well, I'd say the same thing is make sure that you're thinking through all of the aspects of the deal. We've heard some stories already around where things fall down on unexpected situations. When you've got people who've been doing it for 10, 15, 20 years, they've seen things like that and should be able to make it work.
Great. Okay. Thank you, Scott. Those comments actually lead me right into my next question, and this is to Joe Winters. Joe, when you're conducting diligence on a target, what are some of the key items that you're looking for as an operator? And talk to us about some of those pitfalls that maybe somebody here in the audience thinking about selling their business could potentially avoid.
Well, from a buyer's perspective, I'll start with that. Leave no stone unturned, right? So I really would, if we're going to buy a company, I want to make sure I get in the weeds. I understand everything about the company, from its revenue, quality of revenue, how much of it is permanent under contract, to the equipment, as we talked about earlier, to their relationships with their customers. Do they have a big customer and the owner knew them and they don't need an agreement that we're going to need? There's a lot of things. So I look at it and I say, leave no stone unturned. I actually have a couple of examples that Scott was actually involved with, right? So we acquired a company in 2010 from the Department of Justice in Danbury, Connecticut. And we went in there and the company was so messed up. There were under one roof, 26 corporations, 26 billing systems, 26 payrolls. And Scott looked at me and says, how am I gonna check all this out, right? So I said, Scott, there's only two things I really need you to really focus on: cash coming in, revenue coming in, and tons disposed, right? How many tons are they generating and how much revenue are they bringing in, right? And we really broke it down to riding every route, to looking at every dump ticket, to actually going out and visiting customers. We got so granular because I wanted to really make sure that I knew what I was getting into. And it ended up being a great deal for us and a great acquisition. On the other end, you have to have discipline. You have to be able to walk away. If you see something you don't like, or if it doesn't, if you see things that don't smell right to you, and your instincts, you have to follow your instincts. So another deal I was involved with Scott, we spent close to $1 million on due diligence on a company, and 5 months of really, really looking at it really hard. And my instincts told me, don't do this deal. And I ended up not doing it. And I was happy I didn't do it. It was the right decision, right? So, but you got to be able to walk away. You have to have that discipline. And, we all want to get deals done, but you have to have the discipline to walk away when it's not right. From a seller's perspective, when you're selling a company, I've done that. What I would say, if anybody is a seller and you're thinking of selling your company, when you have an agreement in place, they're going to come in with all their people and they're going to do their due diligence. They're going to ask you all kinds of questions. Really make sure you over disclose. Really make sure that you tell them everything that they need to know so they can make a good decision on buying your company. And that's always been my philosophy: over disclose, because then they can't come back and say you didn't tell them that, right? So that's the two things in due diligence that I would say that they're really on both ends from a buyer and a seller's perspective.
Great. I appreciate that, Joe. Very well said. Thank you.
Yeah.
So now I want to just get maybe more bigger picture here as our time is starting to slip away from us here. We're coming to the end of the program. Charlie, just overall, at a high level, what advice do you give others looking to grow through acquisition?
I think the number one advice I would give is to establish an overarching strategy and what you want to accomplish and stick to it. That way you'll have a guidepost to help you through the many pitfalls that you're going to stumble across and the challenges that you have to address. That and we talked about this on a couple of occasions, have a professional, reliable, proactive, and responsive due diligence team, including legal, financial, technical, operational, and anybody else you can throw into the hat to help you consider properly the acquisition that you want to do. And Joe mentioned this, don't cut corners, you'll regret it. But I guess my biggest piece of advice is overall have fun and enjoy it, because that's what it's all about.
Absolutely. Rob, would you have anything to add to Charlie's comments?
The one thing I would say is when you're doing and growing through acquisitions, you need to make sure you appropriately integrate them before you get to the next one and the next one. The biggest challenge you can find yourself in is if you acquire too fast and you didn't actually integrate the prior acquisition or the one before that, and then it becomes too unwieldy to fix it all once you've done 3 or 4, but you haven't appropriately completed the integration of the first one. And the problems snowball. The difficulty of getting it done snowballs at that point, because you start losing information, you lose the mindset of the key people who begin to start looking around going, well, they're smart. These guys that run these businesses, they're smart people. And if all of a sudden things aren't being integrated, they start losing confidence in leadership and management real quick, and then the whole thing unfolds. And so if you're acquiring as a primary means of growth, make sure you complete the integration work before you do the next acquisition. The larger you get and the more solid the core is, the easier the next integration becomes.
Great. Thank you, Rob. I'd agree with that. So, Joe, talk to me a little bit about some of the opportunities and challenges you see for our industry over the next year. And I think we've talked a little bit about those things, but anything else you may think of over the next year, and then some of the longer term challenges we may have over the next, say, 3 to 5 years.
Well, I can only really speak to Long Island because that's the market I'm in, and in this marketplace, disposal is always the biggest challenge. Like as we said earlier, there aren't any landfills, and we're on an island, right? So we have tunnels and bridges that we have to move waste through. That could be challenging, right? So that's always going to be an issue here on Long Island. But overall, I mean, look, I'm optimistic about our industry, and I love it. I've been around it all my life, and it's really it's a great business. There's always going to be challenges and there's always going to be opportunities, but I always say crisis creates opportunities, right? So I'm very optimistic and looking forward to the future, and I'm happy to be in business.
Great, appreciate that.
Yes.
Charlie, would you have anything to add to Joe's comments?
I think Joe covered it pretty well. This has been a really good program, and I thank America for putting this together. I think the participants really enjoyed this.
Great, thank you. Well, gentlemen, I can't believe it, but I think we've made it to the end of our discussion today. And I want to thank we did.
Oh, all right, great.
And I want to personally thank all 4 of you for spending, an hour with us today. There's a lot of other things you could be doing, and it's time well spent. So once again, thank you so much, and I look forward to seeing all of you in person, very soon.